Today, we're going to talk about small cap day trading, the basics of getting into day trading in general, and kind of what you need to know and some of the things you can watch out for, and all of that stuff today in this webinar. We're going to kind of break it down. We're going to go over some key points for you guys out there who want to learn more about this crazy world of momentum, small cap, crazy stocks. And I call them crazy for a reason. I'll show you a stock today that I traded that was all over the place, and I'm going to kind of break down what you need to know, what you need to focus on, and how you can learn how to trade these volatile momentum movers. First off, let's talk about brokers, platforms, and what you're going to need to day trade. Now, I use a program called Dash Trader Pro. Basically, every single broker out there will allow you to use Dash Trader Pro. Now, it looks very simple and old school, but really that's all we need. I don't need any bells or whistles. I need to be able to get in quick and get out quick. I need to see the information in front of me, and I need to see what's going on the chart. Also have hotkeys. So hotkeys are very important. If you do not have hotkeys, if you're trading and you're not using hotkeys, you are limiting yourself to the ability to be able to trade fast, getting in, getting out, and then understanding kind of the idea of hotkeys in general. I've covered hotkeys very extensively on my YouTube channel. If you want to learn more about the actual hotkeys themselves, you can go check that out. But basically what I use is a hotkey to be able to jump into the stock on my keyboard. I hit one key, gets me into the stock, and then I can hit one key again and get out of the stock. Before you'll even be able to type in your order, I can get in and out faster than most people can even type their orders. And these stocks that we're trading move so fast that you really need to be able to get in and get out quicker than anybody else, because at the end of the day, it's all about getting in and getting out. Remember, we're not marrying these stocks. These are not investments. These are not stocks that I'm going to be holding for the next 10 years. These are stocks that I'm getting in, I'm getting out, and I might never see this stock again. So that's momentum day trading. We are looking for opportunities in that momentum. Now, once you figure out your platform, once you get your broker set up and you get everything ready to go, you need to really focus on execution. You need to understand how to get in, how to get out, how to do everything on your platform, and then understand your buying power, understand how many shares you can buy, how many shares you can sell, and understand everything before you even really start to day trade. And that's one of the big things I think a lot of people don't focus on at first. They first get into day trading, and what do they want to do? They want to make money. Everybody wants to get rich, right? Well, the problem is you need to just focus on execution. Focus on being able to get into the trade, understanding when to get out of the trade, and then being able to see the setups and everything like that. So really, I'm telling you, really, when you first get into day trading, just focus on execution. Trade with small size. You don't need to worry about making tons of money. For the first year, if you can just stay alive, you're going to learn so much from actually just trading than if you were just to try to get rich really quickly and blow up your account. Blowing up your account will ruin any chances of actually learning and actually becoming profitable. Now, remember that. Very important. I'm going to give you a breakdown pretty quickly what I have here on my chart so you guys can kind of see what I'm using, how I'm reading the momentum, what stocks I'm looking at, and all of that stuff. Now, I'm trading small cap stocks. These are stocks with small floats that are very volatile. They are risky. They are dangerous. And I tell everybody out there, when you first get into trading these types of stocks, remember, we're not holding, hoping, and praying. We're never holding these stocks longer than we need to. We're not going to get stuck in a stock and hold it overnight or days or weeks, because these stocks could easily go back down to wherever they came from. Perfect example today, IZEA jumped up from, let me move my head a little down here. Move my head down here, it's a little big. So IZEA today jumped up from $1 all the way up here to $2.80. That was this morning at 7 a.m. And look what happened. So it pulls all the way back down here to $1.40. So if you were stubborn, if you bought this stock above $2 and you were holding it, you're hoping, you were praying, and you didn't cut your loss fast enough, well, you could lose a lot of money. So you really need to understand these stocks are dangerous, and we get into these stocks with a plan. We're buying, we're selling, we're cutting our losers before they become massive losers. And that's the big thing to remember here. You can see my P&L today. I made $190 on BioC. I made $150 on CCIH, and I made $300 here on IZEA. I lost $100 on ABIL. That's a different story. It wasn't supposed to be that big of a loss. I lost $50 there on CNTF, and I lost $44 on staff. So you can see how my winners are much larger than my losers, and you don't need to be right all the time. You don't need to always be right, but you need to make sure that your losers aren't massively larger than your winners. And today you can see this exact idea on how to get in, how to get out, and take profit. If the trade goes against you, what do? We cut our losers. We get in, we get out. We don't marry stocks. Remember that. It's very simple. This is not a marriage. We are not investing. We are buying. We are selling. We're getting out and all of that fun stuff. So here I got my chart. This is a 5-minute chart. Now, a lot of day traders, they'll use different time frames. I normally use the 1 minute and the 5-minute chart and the daily chart. I want to see where the resistance is on the daily chart. I want to see what's going on with the actual chart itself. The patterns are going to be easier to find on the 5-minute, and then the 1 minute is going to be a little bit better for me to see my exact entries and my exact exits. Really quickly, kind of breaking down in case you don't understand what support and what resistance is. Support is basically where the stock is finding buyers at, where people are buying, and then resistance is going to be where people are selling. The support area is where you want to be buying at, and the resistance is where you want to be selling. Also, when the stock breaks over resistance, that's a bullish sign. That's a good sign that the stock could possibly go higher. And in reverse, if the stock goes lower than the support, that's not a good sign, and it's probably going to go lower over time. Now, if you just zoom in here on the chart, let me just kind of pull this up here. So just to draw on the line here, support and resistance is one of the most important things to learn when you first start trading really anything, but really momentum stocks. You need to understand support and resistance. Now, okay, I got my support. I see that the stock is bouncing here, 160, 150 area. Clearly, I can see people were buying there at 150. People are buying here at 160. 160, 150 area, there's support there. Buyers are stepping up there because they're thinking that's a good buy at that area. Now, if I'm looking for my resistance, where is my resistance going to be? Let's say I want to buy, I bought this stock at $1.60, and I'm looking at it now. Okay, where's my resistance? I can see there's resistance at $2 because recently the stock got to $2, it sold off, and it pulled back down there to that support. And you can see again later on having trouble there, again pushing up into that $2 area and pulling back down there to that support. Later on, the stock broke above the $2 area, had 1 million shares traded. Volume is very important. We always want to make sure there's volume when we're trading momentum stocks. It's the most important thing there really is. You need the news, you need the action, but you really want volume because volume's a safety net. If the stock starts to crash and there's no buyers, there's no volume, that's a bad thing. The stock could go down very, very quickly, and you can have some very bad problems. So I'm always looking at the volume. The volume's down here on the bottom. It's basically telling me how many shares are traded per candle. This 5-minute candle here, there's 2 million shares traded. That's a beautiful amount of volume. That's basically telling me, hey, Patrick, there's a lot of action here. There's a lot of buyers stepping up. This thing is going up. So that's going to let me know that I should be buying when I see that volume breaking through that resistance. So we're breaking through $2 with a lot of volume. What does that mean? The stock is probably going to go higher. Very simple idea. Don't trade stocks that don't have volume. That's all you got to think about here. If there's no volume, if there's no action, it's not one of those things. We're not just looking for stocks that are just, oh, they're kind of going up. I'm going to buy it here and then maybe it'll keep going. No, I'm looking for stocks that have volume, that other traders are trading. I want to see real volume. Millions of shares traded. That's the type of volume I want to see. I get 1 million shares on a 5-minute candle. I know there's action. You'll see on the chart, I got a couple of different lines. This white line is the VWAP. I've got the 9 EMA and the 20 EMA. That's going to give me an average price in that time frame. And then you can see here on the 5-minute chart, it acts as support a lot of times. So if I see the stock is holding that support, it's basically telling me, Patrick, the stock is probably going to go higher because it's showing support, and all the other traders in the market are watching the same exact thing that I'm watching. So that's what I'm trading. Remember, everybody's trading the same exact charts. So that's the reason we use these moving averages. That's the reason we're looking for support. We're looking for resistance, because everybody's using that same exact chart. Now, it might look a little bit different. Maybe they're using different indicators. Maybe they're drawing their lines just a little different. But really, everybody's looking at the same thing. There's nobody out there that has a better secret. They might say they do. They might say they have a better indicator. But I promise you, at the end of the day, everybody's still looking at the same exact chart. The more experience you have with day trading, you'll kind of figure out over time what indicators work best for your style of trading, and you'll kind of see the whole breakdown, and you'll learn really kind of what your style is. That's the cool thing about day trading, is there's not a particular style that's 100%, that's the one style that you have to trade with. You can be a trader who only buys in the middle of the day. You can be a trader who only buys in the beginning of the day. You can be a trader who buys certain setups and only those types of setups. It really comes down to figuring out what works best for you, looking at all the different setups out there, looking at all the different styles, and then kind of figuring out what works best for you. So now we've talked about the broker, we talked about hotkeys, we talked about support, resistance, and then we talked about kind of just overall indicators that I'm using on the chart. Now, how am I finding these stocks? What am I doing to find these stocks? A lot of times, what I'm looking for is pre-market. In the morning, I'm looking for stocks that are gapping up, looking for stocks that have volume, looking for stocks that have news. And these are the stocks that normally will have action that day. Press releases and news will come out in the morning. When they come out, people get the news, the stock goes higher, and you get the action. You get the volume, and the stock will start to move. And that will normally continue through the day. Now, it doesn't mean the stock's going to go straight to the moon. It means that there's just going to be people looking at it because there is news or there's action on that stock. Remember, momentum day trading. People are trading volume, they're trading action, and that's what they're looking for. If they see a stock with a lot of action on it, there's probably a good chance the stock's going to either go up or, go down. There's always a good chance, but there's a good chance it's going to be volatile, and it's going to give us opportunities to get in and out. Another thing I want to remind everybody out there is you're never going to buy exactly at the bottom. You're never going to sell exactly at the top. One thing that I've learned over the last 2 years of trading is when I take profit, I just got to take it, and I got to be happy, and it's going to happen. I've pretty much just accepted the fact that I'm going to sell a stock right before it goes higher every single time. You can see here, IZEA, I was buying there at 213. It spiked all the way up there to 257. I took profit here, 35. And that's just part of the game. If you're in profit, if you feel like that's what you needed, that's what you want, take it. Don't sit there and think about, oh, the stock could go higher, it could go higher, because there's a chance that the stock could go lower. You can see later, this stock dropped from $2.50 back down there to $2. So that same thing could have happened to me on this push, but it did go a little higher after that. But I still feel pretty good. So I'm happy with the profit that I made off the stock, and I'm not complaining. I'm not complaining about it. I'm taking that profit and I'm walking away. And that's one thing you got to kind of just figure out when you first start trading. Kind of figure out what you want to make in terms of like your goal. If I can make this much money, I'm happy with it. I'm going to walk away and I'm going to be done. And that leads us to our next point. The best thing you can do when you first start day trading is just to focus on not losing money. If you can not lose money for an entire year, it's going to really change your life, if that makes sense. Just try to only focus on not losing money. Don't worry about making money, because if you can go an entire year without losing any money in the market, but only, making a couple dollars, you're still beating the rest of the market. Really focus on not losing money, and then you're going to get to the point, and you're going to get to the point where you're like, oh, wow, okay, I haven't lost money in a really long time. I'm making a little bit of money, so all I need to do is just increase my share size or just keep doing the same thing I'm doing and just trade a little bit differently, push the envelope a little bit more, and I can get to the point where now I'm getting to the point where I'm very profitable. I'm taking profit. I'm doing what I need to do. I need to understand that this is not a game. This is not a thing that you're doing for boredom. If you're bored, if you're getting into day trading because you're bored, that's a terrible way to get into it. Don't start trading because you're bored. Take profit, get in, get out. Don't just sit there and have to be in a trade. When I first started to day trade, I thought that I needed to be in a trade from 9 till 4. I thought I just had to always be trading no matter what. If the market was open, I needed to be in a stock, right? That's all I could think about was I had to be trading. I had to be finding the next setup. I needed to always be trading. And now I'm totally fine going hours or going maybe all day long without actually placing a trade. It's just really about waiting for that right perfect setup. When the setup comes along, I'm going to get in. I'm going to take profit. I'm going to walk away. I'm going to be done. This is part of it. You'll never, like I said, you're not going to catch the whole entire move, but you can try to catch, the meat of the move. And that's really kind of what it comes down to, is catching the meat, getting in, getting out, and then taking profit and walking away. So now that I talked about what you guys should really be focusing on when you first start to day trade, really just focus on not losing money, focus on execution, focus on identifying opportunities. One thing I like to do is I like to record my trades. Even if you're never going to post the trades, it's sometimes good to record your trades that you can go back and look and be like, wow, I didn't notice that. I took profit as the volume was increasing. I took profit as the time in sales was going faster. By rewatching those exits or your entries, kind of figure out, like, what did you do wrong or what did you do right? Kind of figure out that by watching, kind of going back, slowing it all down, identifying different indicators. You got the volume, you got the time in sales, you got everything going on, and you just need to slow it down and kind of look at all those different variables and figure out what did you do right, what did you do wrong. And it also is just kind of a good learning tool to go back and kind of figure out how you can improve what you need to be focused on. Recently, I really told myself I need to focus on identifying the volume, really keeping an eye on the volume, making sure the volume is increasing through the move, seeing the opportunity, and then being able to execute that by looking, at the volume. Like I said, keeping an eye on the volume, time and sales, the overall chart, seeing what's really going on, not just guessing or anticipating, but really seeing what is going on, reading the chart. Remember, we're reading a chart. We're not just sitting here going, yeah, I think IZEA is going to go up. I think it's going up. Okay, I'm going to buy here. I'm really waiting for that confirmation. Confirmation is key. Confirmation is your friend for a reason. Make sure you're identifying the confirmation. Make sure you're actually getting confirmation of the move before you go and jump in. That's really the important thing here. Being able to identify confirmation and then being able to execute that plan. It all comes with experience. The longer you do this, the more patterns you're going to see. You're going to see the same pattern over and over. You're going to see these breakouts, and you're going to be able to be like, wow, yeah, I've seen this before. I know what I'm doing. I'm jumping in. I'm taking profit. This is exactly what happened the other day on the same kind of setup. This is what's going to happen again. Now, that's not to say that it's always going to be perfect, but the more and more you trade, you'll see these different setups repeat themselves over and over. Because why? Because everybody is watching the same exact chart. If you think that it's going to happen, if you're sitting there watching this stock about to break through $2, there's probably 1,000 other traders who are also sitting there watching the stock about to break through $2. So people are going to be doing the same exact plan you have. They're going to be jumping in there at $2. They're going to be taking profit up 20, 30 cents. And you can kind of see why these stocks move the way they do. Now, let's talk really quickly about how stocks move. Obviously, stocks can't just go straight up, or can they? Overall, most of the time, when a stock is healthy, when a stock is moving the way it should, you're going to have waves. So just like the ocean, the stock's going to move up, it's going to move down, it's going to move up, it's going to move down, it's going to move up, it's going to move down, it's going to move up, it's going to move down. Very simple. And a lot of times what happens is the upside will be followed by the downside kind of at the same rate. So you can see here, the stock went from $1.75 up there to $2.30, and it kept going, and then got this big pullback because what do we get? We got a big move up, so the stock kind of pulls back in that same idea. All these people who jumped in right here, what do? They ended up jumping out here, and you get the selling pressure, supply and demand. If there's everybody buying here, they're all buying the supply, the demand is high, the stock's moving up, and then now all of a sudden, okay, everyone's trying to sell. Now we have more supply than demand, and the stock pulls back. Very simple. Stocks move in waves. And remember that when you're trading, really think about the idea that this stock, okay, it's moving up. There's probably a good chance it's probably going to pull back a little bit. So that's going to be my opportunity to enter. And you'll kind of see over time, the more and more you trade, how these stocks move. They move in waves. Same thing here. Stock went from $1 to $2.80, and then we got this big drop there. Because why? Because the stock moved up so fast. So we get all this supply getting bought up. The demand is high, but then boom, there's a ton of supply at the top, and there's no demand because everybody already bought it, and now the stock's going down. Remember, there's always two sides to every trade. There's somebody buying, there's somebody selling. So there needs to be a buyer for your shares. So if you buy here at $1, you're looking to sell at 280, you're hoping that somebody else out there is trying to buy when you're trying to sell. So really quickly, in terms of strategies, like I said, over time, you'll kind of figure out what works best for you. For me, I'm normally trading stocks that gap up in the morning. I'm looking for stocks that have action, that have news, that have volume, and those are the stocks that I normally trade. I'm looking for serious volume. I want to see millions and millions of shares traded, and that's what I'm getting in on. I'm getting in on that strength. I'm getting in on that action, and I'm looking for breakouts. I'm looking for breakouts over resistance, like here on IZEA. I wanted to buy there above $2, but the stock just went straight to the moon. It spiked up like crazy right there, all the way up there to 230. I jumped in there on this little bit of a pullback and then sold in that push. But for me, I'm really just looking for action. And a lot of times that comes down to whole dollar breaks. So normally, people are going to be mentally just kind of weird about buying at $2. It's like a weird thing, right? So the stock gets close to that $2 area. People are selling because they think, okay, the stock's not going to break that $2 resistance. And it builds up supply there. And you actually kind of get this mental resistance where the stock breaks over $2. Everyone's like, oh, I'm buying at 201. You'll see a lot of times when I buy, I'm buying either at 201 or at 203, right above that $2 area where I'm looking for that whole dollar to break. And that's kind of my strategy. I'm looking to buy these resistance breaks. If I know the resistance is there, I know it's breaking, that means there's probably going to be a move following it. So if I'm thinking, okay, we break over 2, there's a good chance this thing could go to 220, 230 just by looking at the overall price action. Where is the previous resistance at as well? So look at that right there, 230 area. And that's kind of what I was looking for. We got right up to that 230. The action was there. I jumped in there. We broke over 230, over that resistance. And that was my trade. That's kind of my strategy to buy these resistance breaks, because I know if I get a big resistance break, that means there's going to be other buyers that are stepping in there, other traders looking for those same exact things that I'm looking for. Remember, we're all looking at the same charts. And that's kind of my strategy right now for trading these crazy small caps. If I jump in there at $2, where is my stop going to be? It's going to be down there at that support area. Support, resistance. Support is going to be kind of where my stop loss is. Resistance is going to kind of be where my target profit area is. And kind of give you that idea of why I'm using support and resistance, constantly looking to see where to take profit or where I'm going to cut my losers at. Remember, we're cutting losers. We're not holding, no hoping and praying. We're getting in, we're getting out, and we're walking away with that profit. So kind of looking at another stock that I traded today, same kind of setup here. You can see we broke out over this 682 area. The stock jumped all the way up here to 750. That's what I was looking for. I'm looking for volume. Look at this stock all day long. Just not much volume there. Not breaking above that $687 area. And then boom, we get the volume. We get 400,000 shares traded on that 5-minute candle. Not a ton of volume, but still, this is a small cap stock. I know that if we get, 300, 400, 500,000 shares traded, the stock is going to move because there's just not a lot of supply. There's more demand. So if a lot of people are stepping in there, a lot of people are trying to buy, I know that the stock is probably going to go higher. Same kind of setup. We broke above that previous resistance, like I talked about. Previous resistance breaks. We got up to that whole dollar area. We broke above 7. I took profit there at 710 for a quick $160 there. So I'm getting in, I'm getting out quickly, and I'm understanding that these stocks, like I said, and I'm understanding that these stocks could crash at any moment. You can see here, you can see how once I sold, yes, it went higher. It got up there to the 755 area, but right after that, it pulled way back down there below where I entered at. And if I would have held, if I wouldn't have sold, if I wouldn't have taken profit, I would have ended up losing money. So again, very important to understand entering, exiting, understanding they're quick and they're in and out. We're taking profit and we're walking away. So same kind of setup, buying the strength through that resistance. I like to see that there's strength there. I want to see volume. I want to see action. Because remember, momentum day trading. It's called momentum day trading for a reason. We're trading momentum. Momentum meaning the stock's going up or the stock's going down. So I might short a stock if it's crashing and I see the momentum is going the other way. We have no bias. It's not about I like the stock because it's going to go higher or I like that the stock has good news. Most of the time, I don't even read the fundamentals. I'm just in, I'm out, I'm trading the actual action on the chart. And that's, I think, one of the most important things to remember here is we're not investing. No, 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 we're not investing. We are buying, we are selling, and we're taking profits. So that's kind of two setups today: BIOC, IZEA, buying those resistance breaks. And it's funny because both of those setups were at the end of the day. Normally I trade in the morning. Lately, the small cap world has been really just kind of selling off at open. You can see the stock going from 682 down there to 560, just selling off all morning long. So you'll have 2 or 3 days where the small cap market is really hot. It's just going bam, bam, bam. It's going off. And you'll have days where after those 3 or 4 days, the market kind of slows down, and it'll slow down and people will kind of wait again for the market to heat up. And you'll have these patterns where small cap market's going crazy and the rest of the market's kind of like, eh. But the one cool thing that I do like about small caps is that even if the market is red, let's say the overall market is red, it's crashing, you'll still have some of these crazy small caps that are up 200, 300% on the day. So there's always opportunity, and there's opportunity both ways, on the way up and on the way down. So if your broker has option to locate shorts, it depends on the stock, but there's going to be days where you can make a killing really shorting some of these crazy stocks as they start to crash. Because remember, most of these stocks that go straight up, they're going to go straight back down. So there it is, kind of just talking about my strategy for trading these resistance breaks. And it kind of works in the inverse as well. Let's say a support area breaks down really hard and I want to short a stock. I might look to short a stock if I see that there's a double bottom. Let's say like this stock, BIOC, it breaks below this support area and I see, okay, there's a lot of support there, and then boom, we're breaking below there. Now I'm thinking, okay, there's a good chance the momentum is against the stock. It's probably going to go lower, and it might pull all the way back down here to the 460. We can see that next kind of support area down there at the 460. So I can see there's a big gap, and there's the next support down there. Maybe there's a little bit there at 520, but overall, if the momentum is going down, there's a chance the stock's going to continue down. It's momentum day trading for a reason, people. We're trading momentum. The stock, we're trading whichever way the stock's going. We're not trying to trade against it. We're just trading in, we're trading out, and getting that profit and walking away. Now, just to kind of recap everything, like I said, the big thing to think about is finding a quality broker with hotkeys. Hotkeys, hotkeys, hotkeys. I cannot stress enough how important hotkeys are, and really just kind of figuring out what platform works best for you, having your screen set up and just kind of figuring out your overall setup. What's going to work best for you? That's the key here. It's not about what somebody else is doing. It's not about some other guy's plan or idea. It's what works best for you, because at the end of the day, it's your P&L, it's your money that you're risking. You need to make sure that you're trading the best setups that work for you. So now you have your broker, now you got your hotkeys. You got to figure out what's next. You really need to figure out what indicators you want to use. You want to figure out what kind of stocks you're going to trade, and you need to kind of figure out your scanners and all of that fun stuff. It all just comes in time. It comes in time. And over time, you'll kind of figure out what works best. You're going to change things around. You're going to use different things for a little bit. You're not going to use different things. And you're going to kind of just see what works best. And that's kind of what I tell people. It just takes time. If you can just stick around, if you can stay alive in the market, you'll learn. And that's what's been best for me, is I just been trying to learn different things and focus and really try to set myself up to be the best trader I can be. You got your broker all set up and you got your money in your account. You need to just focus on not losing that money. I got $3,000. Let's say I got $3,000 on my account, and my goal is to make $100 every day. I want to make $100. That's a great goal. It's a pretty simple goal. If you're using margin, $100, you can do it. You don't want to have a goal to make $100 and then be losing $300, $400 every day trying to make $100. You want to really make sure, if you're going to only make $100, that your loss is at maximum $100. You don't want to go and lose a bunch of money and not make a lot of money. It's really what it comes down to, is you need to focus on small size, taking profit, and staying alive. Stay alive. I promise you, if you can stay alive, you're going to become a better day trader over time. I'm a much better day trader today than I was 3 or 4 months ago. It just takes time of really just focusing and perfecting the craft and learning. At the end of the day, there's only so many things you can put on the chart, or so many setups, or so many different indicators, stuff like that. There's only so many things you can read about. When it comes down to it, it just takes experience and learning how stocks move, and then you'll see over time the same setups, the same patterns over and over. And before you know it, you're going to be like, wow, I've seen the same exact pattern before. I'm going to take profit. I'm going to jump in. I'm going to make some money because I know that this is going to set up the same way it's set up before, and this is the way I want to trade it. So just focus on staying alive. Do it. I promise you, stay alive. Also, what you should be focusing on. That's kind of protecting your capital. And then also, like I said, my strategies, you'll figure out over time what works best for you. But my strategy is I want to get that confirmation. I want to make sure that the volume is there. I want to make sure the action is there. And I'm looking for those resistance breaks. I'm looking for moves. I'm looking for actual momentum. I'm not just trying to buy at like certain points. I'm not like, oh, well, I'm going to buy here because I think it's going to go up. No, I'm waiting to see the action. I'm waiting to see the confirmation. That's the key here. Confirmation. And I think breaking through resistance is always a very strong confirmation. If we're breaking through resistance, that's probably a good sign the stock's going to go higher from there. You just got to be careful because sometimes we get these fake outs. You get a breakout, you'll get a breakout, and then all of a sudden it just gets smacked. So you have to make sure that the volume is there. Volume is important. If you have good volume, there's a good chance the stock's going to go higher. And like I said, don't be afraid to record your trades. Go back, look at your entries, look at your exits, figure out what you could do better. Maybe you can't do anything better. Maybe you traded it perfectly, but it's good to see, kind of see what the volume was doing, see what the time and sales was doing, see what the level 2 was saying when you were buying or when you were selling, and kind of look at all those different indicators. There's so many indicators to look at, so you really just got to kind of break it down, slow motion, record your trades, spend time, go back, look at what you're doing, and kind of figure out what you can do better. That's why I love to make these videos, because I can talk about it, and I talk about it out loud. I tell people can actually give me some feedback, and I can kind of learn and become a better day trader by really just analyzing my own trades. And I think it'll really help you by also doing the same exact thing. Analyze your trades, go back, record them, look at them. So there it is, kind of just a breakdown on trading small caps, kind of the basics, my strategies, what I'm doing to make money trading these crazy stocks, and kind of how you can learn and all of that fun stuff. You can definitely check out my YouTube channel. I'm Patrick Whelan over there. You can check it out. There's a bunch of free videos, there's a lot of live trades and all of that fun stuff over there on YouTube. Big thanks to the guys at Speed Trader for the support, for putting this on, and I will talk to you guys later on. Thanks for tuning in.